People are always asking me what the secret to wealth is. I just listen and laugh. I laugh because they're asking the wrong question. And I laugh because they haven't the faintest idea what wealth even is. What secret? If there's any secret, it's a truth most people don't want to face. The primitive accumulation of capital has never been an elegant affair. You young people, you have this fantasy of yourselves in velvet jackets, sitting in front of floor-to-ceiling windows, tapping a few keys on a keyboard, and then watching wealth materialize in your accounts like morning dew. Don't be a damn fool. Real wealth is dug out of the mud. It's caked in sweat. It stinks of the kill. And it's often tangled up in transactions and choices that would make you uncomfortable. The starting point of wealth is necessarily some degree of discomfort. Take a good look at the people who are always hovering just outside the gates of wealth. Their thinking is always the same. They crave the returns of the capital markets, but they despise the volatility. They want the market's favor, but they don't want their judgment to be scrutinized in public. They want their investing to be like a sterile laboratory experiment, clean, controlled, and absolutely safe. They call this posture prudence. In reality, it's just a fig leaf for their own cowardice. Prudence is a fine thing. But when prudence turns into paralysis, it becomes an accomplice to your poverty. They wait. They wait for the market noise to die down, for the economic data to be 100% confirmed, for everyone to give them a round of applause before they're willing to make a move. But the market isn't a library. It's a chaotic, screaming bazaar, filled with arguments, hawking, and unpredictable noise. You have to understand what wealth is at its core. It's the monetization of insight. It's the exchange of value. And the prerequisite for all of that is that you must first have the guts to take a seat at the poker table. That you have to lay your judgment, your strategy, and your cold, hard cash out there under the market's spotlight. You have to endure the doubt. You have to endure the ridicule. And you have to hold your course through a flood of noise and emotion. If you're always hiding in some forgotten corner, never letting your ideas be tested by the market, then why on earth would you expect the great currents of capital to flow in your direction? The accumulation of wealth is a forging of character, far more than a refinement of method. I've seen too many brilliant people. They know macroeconomics and industry trends inside and out. They can recite valuation models in their sleep. They're fantastic analysts, but they never get in the game. They'll toss and turn at night over a missed opportunity and dissect market trends with stunning clarity. But come daytime, they won't even dare to make a single public call on value. They always say, I'm waiting for the perfect entry point for a market where the noise is completely filtered out. Stop kidding yourselves. I've been hearing that line for decades, and I've never seen anyone get rich by waiting for perfect. I've been in this game for a long time, lived through countless bubbles and crashes, and I can tell you with absolute certainty, every single high return, alpha generating opportunity in history was panned from the sludge of systemic risk, where everything, good and bad, was mixed together. The market's current carries both reason and madness, and it's always full of sand and rock. You don't get to separate them. They think you're waiting for the perfect investment, But what you're really waiting for is an ideal moment that will never arrive. Now, you aren't waiting for an opportunity. You're waiting for inner peace and absolute certainty. And I'm sorry to tell you, but in the places where real money is made, those two things have never existed. The wealth is not born in a calm harbor. It grows right there in the turbulent crowds, in the gut-wrenching volatility of the charts, in the arguments over value, the market noise that keeps you up at night. If you want the freedom to captain your own ship, you first need the stomach to get battered by the waves. If you want a ticket for a long voyage, you have to accept that the deck is always going to be wet and smell of salt. If you want the harvest, you have to accept the dirt on your hands and the burn of the sun. To play this game is to allow yourself to be constantly intruded upon by the market. And what is this intrusion? It's not just someone questioning your logic. It's a direct assault on your psyche. Every time you allocate capital, someone will question your reasoning, whether they're a pro or a clueless bystander. Every time you disclose a position, you might have to deal with irrational market swings, even baseless accusations and mockery. The market is not a gentle teacher. It's a brutal judge. The moment you build what you think is a perfect trading system, you'll face a barrage of noise from all sides, including from outsiders who don't understand your strategy in the slightest. They'll call you a gambler, a lunatic, or just plain lucky. All of this is an intrusion on your character. These intrusions rattle you, make you doubt yourself, and wear you down. And it's precisely because they can't stand these intrusions that so many people quit. Their day jobs have already drained them. Why should they let their personal investments torment them too? So their gut reaction is, forget it, I'm out. I'll put my money in the safest place I can find and at least get some peace and quiet. They willingly sacrifice enormous future growth just to maintain their place, present-day emotional equilibrium. But here's the rub. The real opportunities are hidden right inside those intrusions. Every person who questions your logic, whether out of goodwill or malice, is forcing you to re-examine your own blind spots. Every irrational market swing is giving you real-time feedback on crowd psychology and the actual flow of capital. Every intrusion is a chance to temper your mind and your adaptability, giving you a deeper understanding of human frailty. To block out these intrusions may feel like you're protecting your inner peace, but what you're really doing is closing the door to wealth. You think you're protecting yourself, but you're just isolating yourself. Wealth is exchanged among people, and its value is established through debate. If you lock yourself in a room, how are you ever going to hear the market calling? The real wealth isn't about how much you know. It's about how much you can endure. The winners who truly make it through bull and bear markets aren't all made of steel. They just know how to differentiate. They know how to distinguish between valuable market feedback and useless emotional drain. They allow themselves to be intruded upon, but they are never devoured by the noise. They quickly identify the real value behind the information, like a seasoned fisherman who throws the junk back in the water and keeps only the fish worth having. This is a highly selective ability to absorb information, and it requires a kind of patience that's hard to describe. They focus their energy on the thinking and actions that yield long-term returns, not on responding to every single doubt and anxiety. They know that noise is the background music of the world. Trying to eliminate it is as absurd as trying to stop a river from flowing. The world, by its very nature, is a mixture of chaos and order. If you want to take an outsized return from this world, you must first accept the chaos and risk that come with it. The mentally immature always want it both ways. They want their assets to double, but they also want to sleep soundly at night. They want the market's attention, but they don't want to be disturbed. This is a childish fantasy about reality and a misalignment of their own capabilities. They mistake this internal conflict for a flaw in the market. They're always complaining. The market is irrational. Other people are too greedy. They miss their chance. They just won't admit that the very things they complain about are the fuel that makes the market run. True maturity is maintaining your clarity in the midst of chaos and learning to dance with it. The market's volatility is like a heartbeat. As long as it's alive, it will have its ups and downs. An investor who demands the market stop beating is not asking for a return. He's asking for a corpse. In the world of investing, safety is often an outright lie. The difference between us old-timers and the average person is that we know deep in our bones that noise is permanent and volatility is eternal. Don't waste time complaining about it. We adapt to it. We don't run from it. We use it. We know that fear and greed are like the tides. You can't stop them, but you can learn to harness their power. In the capital markets, the real path to survival is this: trade immense fortitude for opportunity. You have to be mentally prepared to be humiliated by the market, tortured by price swings, and misunderstood by the people around you. But every one of those agonizing moments is a chip you're putting on the table for a future payout. Use extraordinary patience to earn trust, and eventually the market's validation of your strategy. And those who spend their lives hiding in the corner of absolute safety will eventually discover that the one thing they've been guarding so carefully is poverty itself. Because inflation is relentless. It's an invisible hand, slowly stealing the purchasing power of their so-called safe assets. They avoided short-term volatility, only to fall into a long-term trap. They avoided the market's intrusions, only to be devoured by time. As slow as fast. That's the second secret I'll give you. You're all in such a hurry to see results, always looking for the next get-rich-quick story. But real wealth is never determined by a single event. It's determined by the power of compounding and a consistently low error rate over time. You're not pursuing wealth. You're pursuing instant gratification. You treat investing like a lottery ticket, hoping one trade will solve all your financial problems for life. This is a complete disregard for the laws of mathematics and an abdication of personal growth. Of all the big winners I've known, not one of them got there with a few spectacular trades. They got there through decades of boring, disciplined, monotonous persistence. The success in investing is doing the boring things over and over again until the market finally pays you for it. It's like being a farmer. You can't plant a seed in the spring and demand a harvest in the summer. You have to accept the waiting, the unpredictable weather, and the risk of pests. But as long as you keep planting and keep cultivating, time will give you your answer. You people are always doubting the seed, complaining about the soil, and then pulling up the sapling right before the harvest. You think of patience as passive waiting. It's not. Patience is an extremely active and disciplined course of action. Real patience isn't doing nothing. It's sticking to your well-thought-out strategy amid the market's roar. It's keeping your head when everyone else is going mad with greed, and it's having the courage to act when everyone else is paralyzed by fear. Now, how much mental energy do you think that takes? Far, far more than the frantic buying and selling of the herd. Psychology trumps methodology. That's the third iron law I'll give you. You think you're failing because you're missing some secret indicator or some magic formula. You keep learning new technical analysis, new trading models, but your net worth stays flat or goes backward. Your problem isn't what you don't know. It's that you can't execute on what you already know. The greatest enemy isn't the market. It's your own emotions. Greed makes you buy at the top, and fear makes you sell at the bottom. Your logic is completely hijacked by your feelings, rendering all your brilliant strategies worthless. If a man can't even manage his own emotions, what right does he have to manage his wealth? The market is just a magnifying glass. It takes your human weaknesses and blows them up to monstrous proportions. The anxiety and impatience that seem minor in your daily life become a giant black hole that swallows your savings in the capital markets. That's why we old-timers have one paramount principle when we invest: negative logic. We aren't trying to figure out how to make more money. We're obsessed with figuring out how to avoid making fatal mistakes. Now, making money is the outcome. Not losing big is the prerequisite. If you can maintain a low error rate over a multi-decade period, compounding will take care of the rest. They're always thinking, how can I run faster? We're always thinking, how can I avoid falling down? The one huge drawdown can take you years to recover from. So, successful investors are, first and foremost, excellent risk managers. They aren't timid. They just understand the brutal math of losses. If you make protecting your principal your number one priority, wealth will eventually find its way to you. If you make getting rich quick your number one priority, you'll just end up as fuel for the market. You're all seduced by the stories of extreme success, imagining you'll be the next legend. But you ignore the fact that for every one of those legends, there are thousands who went completely bust, chasing the same extreme risks. I've never bought into the lazy mantra of high risk, high reward. The real investing is about using reasonable, controllable risk to capture outsized returns. This requires you to pay a huge price in time and cognition to truly understand what you're investing in and to design your margin of safety. This isn't gambling. It's deep research and long-term positioning. And that is why the primitive accumulation of capital has nothing to do with elegance. It requires you to do a lot of things that don't look elegant. It requires you to spend countless nights poring over boring financial statements, tracking small companies no one cares about, enduring periods of waiting that make your friends think you're wasting your life. What you think of as elegance is the result. What we went through was the ordeal, the buying. You must allow your life to be intruded upon by the market. You must accept that your portfolio might look completely out of step with the mainstream. You must accept that the market might give you the worst possible price right when you need cash the most. You must learn to live with uncertainty. Too many people see uncertainty as the greatest threat. But let me tell you, uncertainty is the fertile soil where wealth grows. If everything were certain, the price would already reflect it. Where would the excess profit be? Your alpha comes from your ability to tolerate the uncertainty that others cannot. When the market is in chaos and everyone is selling out of fear, if you can clearly see the long-term value of an asset and have the courage to swim against the current, that is your moment to generate alpha. But to do that, you must first endure the immense psychological intrusion of being swept up in the market's emotion and questioned by everyone around you. If you've never lost sleep over the market's chaos, you haven't really played the game. Those who just watch from the shore can never understand what it feels like to navigate a storm. They just build a false world of safety in their own minds, thinking they're smart enough to avoid all possible losses. But the biggest loss is always what you miss. A missed opportunity is infinitely harder to quantify than an actual loss. An actual loss hurts, but at least it teaches you a lesson. A missed opportunity leaves you trapped forever in the regret of what if, and it gives you nothing in return. I'm not telling you to be reckless. I'm telling you to know the difference. You have to distinguish between your absolute, unbreakable principles and your psychological comfort zone. Too many people confuse the two, and they end up cloaking their laziness and cowardice in the language of morality. There are only three real principles: don't cheat, don't be evil, and don't break the law. These are your commercial and social bottom lines. Within those boundaries, most of the actions and choices that make you feel uncomfortable, anxious, or inelegant are the very path you must walk to reach a higher level of understanding. If you want to fish in the ocean of wealth, you have to be willing to roll up your pants, get your hands wet, and maybe even get covered in mud. If you're not willing to get dirty, don't expect to pull gold out of the sludge. If you're not willing to be questioned, don't expect others to bet their chips on you. If you're not willing to endure volatility, don't expect to enjoy the stunning power of compound interest. Your psychological comfort zone is the greatest enemy of your financial growth. When you feel comfortable, that's usually when you've stopped growing. Real growth always happens at the edges, at the moments when you feel like you can't take any more. Every intrusion from the market is helping you expand the boundaries of your mind. You people place too high a value on peace and quiet. In this rapidly changing world, the only place you'll find absolute peace and quiet is in a graveyard. If you want to stay vital, if you want to get outsized returns, you must remain vigilant, constantly learning and adapting. This itself is a continuous psychological investment, a never-ending intrusion. This sustained, disciplined psychological investment, that is true freedom. A lot of people think financial freedom means you don't have to do anything. Wrong. The financial freedom doesn't give you the right to stop working. It gives you the right to choose your work. It's the right to choose where you direct your mental energy. And to get to that point, you first have to learn to direct your mental energy toward the market, not run away from it. You're always looking for a perfect mentor, a perfect system. But let me tell you, every top-tier system in the world was built from countless failures and endless adjustments after being battered by the market. Nobody is born knowing this stuff. We old-timers have just fallen down a few more times than you have. The failure isn't what's scary. Your resistance to failure is what's scary. Every piece of feedback from the market, even a loss, is a valuable data point. If you run for the exit at the first sign of an intrusion, you haven't even collected enough data to adjust your strategy. How could you possibly improve? You must let the market teach you. And the market's lessons are always rough and direct. It's like being an apprentice. You have to endure the master's harshness and criticism to learn the real craft. You can't ask the market to be gentle with you, because it won't be. The law of the market is survival of the fittest. Brutal competition. You either evolve or you get eliminated. And evolution is a process of constantly adapting to uncomfortable environments. So, the next time you feel anxious, the next time your investment is questioned, the next time market volatility drives you crazy, don't run. That is wealth waving at you. It's testing you to see if you're worthy. To be a winner, you must develop the ability to turn noise into information. Most people hear noise and start complaining. A few people hear noise and know it's the sound of the market breathing. They look for patterns in the chaos and opportunities in the irrationality. This is an incredibly draining process. That's why the people who try to make money from the quiet of their studies are destined for tragedy. They want to use elegant theories to command a raucous trading floor. They don't want to get their hands dirty with worldly affairs. But wealth itself is born from the most mundane, bustling crowds. A pulse. You have to get into the crowd, feel its pulse, its greed, and its fear. You have to learn to use human weakness, not become its victim. You must understand deeply that market swings are mostly driven by emotion. When you see a huge gap between price and value, that's an opportunity someone else's emotional breakdown is handing to you. But to seize that opportunity, you need superhuman composure and the courage to resist the pressure of the herd. This requires you to allow yourself to be intruded upon, to be seen as an oddball by your peers, to be told you're wrong by your friends, to be drowned in the fear peddled by the media. Only when you can hold fast to your long-term logic, in the face of this massive intrusion, will you profit. You're always looking for shortcuts, but wealth has no shortcuts, only relentless accumulation. This accumulation isn't just about money. It's an accumulation of mental fortitude, of insight. Behind every successful investment are countless failed experiments and adjustments made after being mercilessly beaten by the market. Take the long view. This is my final piece of advice. Every bit of volatility, every doubt, every uneasy moment you endure now, if you can convert it into mental resilience, it becomes your most valuable asset. Don't just look at today's gains and losses. Look at how long you've survived in this game and whether you've become stronger. We old-timers don't get by on being smarter. We get by on surviving longer and seeing things more clearly. Time is wealth's best friend and its cruelest enemy. Accept the intrusions. To endure the chaos, Time will bestow upon them the full power of compounding. But for those who only seek stability and quiet, time will just relentlessly dilute their wealth until the safety they guarded their whole lives becomes true poverty. So, go on. Take a seat at the table. Let the market teach you. That, right there, is the only price you have to pay for freedom. You have to face the fear inside you, not disguise it as prudence. Real prudence is knowing where the risks are and preparing for them, not running away at the first sign of trouble. That isn't prudence, it's cowardice. And there's no room for cowards in the investing world. That will make you forever miss the opportunities that require courage to seize. You have to learn to embrace the market's chaos. Because the market's chaos is precisely when wealth gets reallocated. It's when the water gets murky that the fish are easiest to catch. The water is crystal clear. Everyone can see what's going on. What kind of opportunity is that for you? So don't complain about volatility. Be grateful for it. Volatility is your friend. If you can't keep a clear head in the middle of chaos, you are destined to become part of the chaos. This requires extreme mental discipline. You have to be able to examine an asset's true value when its price is plummeting. You have to be able to look for hidden bubbles and risks when everyone else is cheering. This is a contrarian process, and it will inevitably make you feel isolated and intruded upon. But high returns have always belonged to the minority. The moment you choose this path, you've chosen a path that runs contrary to popular opinion. This guarantees you will have to endure more isolation and more doubt. If you expect everyone to understand you, your returns will be just as mediocre as everyone else's. The accumulation of wealth isn't a sprint. It's a marathon that spans decades. Along the way, you'll face exhaustion, injuries, and endless doubt. The ones who drop out midway are almost always the ones who couldn't handle the long-term psychological intrusion. They burned through all their patience and emotional capital in the first half of the race. We old-timers have just learned how to conserve our emotional energy. We focus on what matters most, understanding value, controlling risk, and waiting. As for the irrelevant noise and irrational swings, we choose to ignore them. This isn't numbness. It's a highly efficient form of energy management. Your emotional capital is your most precious investment resource. Once your emotions break down, your judgment fails, your discipline collapses, and you start making those fatal mistakes. So you have to guard your emotional capital just as fiercely as you guard your financial capital. Don't let useless intrusions deplete it. At its core, value investing is simply a philosophy for fighting emotional intrusion. It demands that you hold fast to your belief in long-term value in the face of short-term price fluctuations. This isn't just an empty phrase. It requires you to understand the business logic behind your holdings more deeply than anyone else. Only then, when the market is giving you its ugliest scowl, can you remain unshaken. If you don't even understand what you own, how can you possibly withstand the fear that comes with a falling price? That's why the people who complain that financial reports are boring or that research is a hassle are destined to fail as true investors. They're just speculating, playing with luck. And luck has never been a reliable source of wealth. You're all too willing to trust your hot hand or your gut feeling. But let me tell you, in a mature market, all excess returns come from excess insight. Without that extra insight, all your moves will eventually just revert to the mean. You need to treat investing as a lifelong practice of learning and refinement. This learning is a process of constant interaction with the market, of allowing it to intrude upon you and challenge you again and again. Every time you get knocked down, you have to get back up, analyze why, and adjust your strategy. If you don't have that kind of resilience, you have no business talking about financial freedom. The price of freedom is that you must take full responsibility for every single one of your choices. Your strategy is put to the public test, and the market proves it wrong. You can't blame anyone but yourself. Accepting the weight of that responsibility is the first step to becoming a mature investor. So, get rid of your fantasies about elegant money making. The primitive accumulation of wealth is full of sweat, dust, and psychological pressure. You have to be willing to face the moments that are uncomfortable, uncertain, and misunderstood. Only then can you, over the long river of time, build yourself an indestructible moat. And that moat isn't built of money. It's built of your mental resilience, your patience, and your low error rate. That is the only secret to wealth you can take with you, one that works in any market. There are no tricks to it. There is only the long, hard road of self-cultivation. This journey is your lifelong war against your own human weaknesses. The key to victory lies in whether you can endure the market's constant intrusions and transform them into fuel for your own growth. That right there is the true way to survive. You have to learn to endure the mud before you've earned the right to reach for the stars.